Welcome back. The questions still coming in about inflation and the economy. We are continuing our live virtual conversation with financial advisor Sean Toll. Sean, one person asks, what is the best way to maximize personal savings right now? Savings account, a CD, an investment account? What would you recommend?
A savings account is going to get you nothing. A CD is going to get you a little bit more than nothing. An investment account you can make money in, but the problem with or the issues with an investment account is that you can lose money because there's inherent risk in making investments. So if you can to maximize savings, is a really difficult thing to ask. There are certain tools out there you can use. One is a type of annuity. You can do a short-term one, only 2 years, maybe even 3 years, and it's going to do much better than a bank CD account, but it's not going to catch up with inflation right now or keep up with inflation.
And we want to ask you a question about the interest rate increase from the Fed as well. What is the best strategy for lowering debt like credit cards and other loans to minimize the impact of those rising rates?
It keeps coming back to the budget. You've got to look at your budget and understand where you're spending your money and if you have any left over. If you have some money left over, I would put it after putting money into your savings, especially for retirement. I would use that money, leftover money, to pay down the higher rate debt that you might have. Don't worry about your house, but if you've got credit card debt, that's typically the highest because it's not backed by anything. It's not secured. So I would go after that credit card debt first.
And we want to ask another retirement question. Due to inflation happening right now, someone asks, should I adjust how much money I'm setting aside for my retirement?
You want to put as much money as you can afford to put aside for retirement. You can utilize the accounts that we have available, such as IRAs and 401ks. I mentioned earlier, you have limits to that. You can still put money aside into other accounts that you use for savings. I would continue to do that because with inflation this high right now, it's not going to last forever, but it may come back again in the future. So the more money that you have access to in retirement, because you're not making money anymore, you're going to need to use that savings. The more money that's there, the better cushion you'll have.
I have a question on student loans as well. Will the interest rate increase affect student loans? And are there any options to deal with that?
That's not entirely my wheelhouse. I do believe that the rates will impact your student loans because they are tied. They're offered by the government, and private loans too. They have to be competitive. I do believe that those rates will increase. The best way to fight against that is to pay as much as you can out of pocket. You also want to go for as many scholarships and grants as you possibly can. There's tremendous resources out there, both within your school, whether you're in high school or even in college, and online. So going after scholarships and grants is the low-hanging fruit, and you'll get the biggest bang for your buck.
Sean, fantastic advice. Thank you so much. We really appreciate you joining us today.
It's always my pleasure.